Welcome to AM Best Audio.
I'm John Weber for AM Best TV, and we're at the WSIA conference in San Diego. We have a great panel today to talk about cyber insurance. They are David Blades, Associate Director, AM Best, Steve Robinson, National Cyber Practice Leader for RPS, and Dwayne Crawford, Head of Wholesale Cyber and Technology Underwriting for Accent. Dwayne, what are some of the newer risks that you've been noticing when it comes to cyber?
Sure. Thank you for asking me that. I'd say a lot of the risks that are newer and are emerging are related to unauthorized collection, which is people using pixel technology and collecting information and not getting the proper disclosure and consent requirements to use that. And that presents some privacy and regulatory issues. There's also some trends we're seeing in artificial intelligence, specifically related to privacy, regulatory, and intellectual property infringement. A lot of the intellectual property infringement arises from people using the technology and claiming fair use, but not sure if fair use is the right way to use it. And the last thing I would say, we're looking at a lot of exposure related to third-party vendor risk. A lot of clients rely on a third party to do some sort of outsourced technology work, and that third party vendor may have some issues which will impact the client, not a fault of their own.
Yeah, I'd say just picking up on that, we talk a lot about AI and Dwayne just mentioned it. I think from AM Best perspective, when we talk to our rated insurers, we are looking into the fact that the risks that are involved with AI still, we're still discovering the full breadth of those risks. And again, as Dwayne mentioned, the fact that AI, is using external inputs for that information. The copyright infringement issue is obviously one that I think is still, I think the insurance industry is still getting its arms around. And I think as things continue to develop, that's one thing. So as many positives as you can think of in terms of what AI potentially can bring, to a number of different industries. Like a lot of emerging technologies, there are also risks and security issues that are involved. And I think from that perspective, cyber insurance is still going to be, fast moving, and, it's going to need the types of, insurance solutions I think that surplus lines companies in particular can provide.
And I would add to that I think AI is a great example of what has happened in the insurance industry and cyber from the very beginning. When it first started, it was very much a technology-focused product where you really just had the tech people in the room. And then we quickly realized, it needs to be it's a legal discussion, it's an HR discussion, it's a marketing discussion. AI, more specifically, and pixel tracking and things like this, now the marketing team needs to be a part of the risk management team, and they need to be coordinating their efforts. And likewise, with AI, when you're making these models and you're using your own data to inform those models, I think there's not often a lot of collaboration between the tech side, the legal side that says, hey, are we allowed to use this information? Is this a good idea? Have we secured the proper permissions, et cetera? And so that's an area that I think we're going to see a lot of expansion in as well.
And Dwayne, the unauthorized collection that you referred to, a term that I have never heard before, by the way, I'm assuming that refers to things like deep fakes that we're seeing.
Yeah, it is related to that. And a lot of it really is related to collecting data of individuals without giving the proper consent or disclosing to them that you're collecting it. And it is considered unauthorized because the individual's information that is being collected, they're not always aware that a technology is using their information or collecting it.
And I shook my head no for a second there, but I just want to clarify on unauthorized collection with respect to deepfake. Where we're seeing the most unauthorized collection right now is exactly what you were speaking of earlier, Dwayne. And it's interesting because different carriers are taking different approaches to this. And one thing that we don't like to see is just a wide-scale application of an unauthorized collection and use exclusion, when really we need more specificity with respect to biometric information privacy and website tracking and pixel use and things like that, as opposed to just the wholesale, let's exclude all unauthorized collection and use, because then we can start to run afoul of certain privacy laws that really talk more about just the unauthorized release of private information, but also how you use or store or capture or get rid of that data, and that becomes important also.
And Steve, we've seen some pretty high-profile events over the past few years. Despite that, capacity and pricing seems to be pretty favorable. Why is that?
we've seen some high-profile events just in 2024. You're right, and it's interesting because I think in each of those there's very specific application in terms of industries that were affected. Obviously, the big one most recently with the security vendor that had the security failure. We didn't see that as much in the SME space. That was really more impactful on larger risk, and also it was something that could be remedied fairly quickly through manual. You had a lot of IT people staying up late at night and on a weekend doing work on that. It didn't have the reverberations through the market that maybe we initially feared. There was another one that was a SaaS provider earlier this year, specific to the car dealer industry. That was one specific vertical, right? And so, and I don't think that we've really realized the impact of that loss yet, because you're going to have a long tail on BI claims that we're not used to. Usually you have a data breach, you know fairly quickly what the fallout is going to be, take care of it, remedy it, move on. These are going to start to have longer tails because not only are they involving loss of business income, but also potential litigation. We're seeing an uptick in third-party losses too. So I think it's coming. It's just a little bit on a delay right now. And so we've been predicting for about a year that we're going to start to see this turn. Haven't seen it turn as quickly as maybe we thought it would, but now we're starting to see signs of some change in the market.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
And David, you touched on it a little bit already, but how is surplus lines helping to solve for cyber?
Well, I think, this is one of those risks, cyber risk and just, everything around that, I think is, kind of right up the alley of surplus lines market in terms of what's needed. And Steve mentioned it earlier. I think when you look at some of the risks that are involved with cyber, you can't take a broad brush in terms of the approach to it, how you're going to apply exclusions, how you're going to grant coverage. Specificity that's needed to really address some of these risks and to do that successfully, as every insurance company wants to do. I think that's right up the alley of the surplus lines market in terms of the freedom of rate and form and the ability to craft coverage specific to every insured. Again, different industries have different nuances that require different types of coverage, different types of coverage grants or exclusions, what have you. That kind of specificity is really part and parcel of what the surplus lines market can bring to this issue. And so I think those types of companies and the creativity and the tailored coverage that is specifically needed for the risks that all these types of emerging risks, emerging technologies, companies that are changing and adding to their technological capabilities, they really do need the specificity and nuances that surplus lines companies can bring to the marketplace and bring to the risks that are involved to really provide the coverage that's needed.
Yeah, that's part of what I love about cyber is that the very nature of the risk is so dynamic, and that calls for a nimble process to be able to respond to that. And we had meetings with numerous carriers this week where we're talking about new ideas that we have from a coverage perspective to address some of these newer risks. And it's nice to roll up your sleeves and say, let's do something new. Let's do something that hasn't been done before and address this so that we can get out in front of that for our customers.
Steve, you mentioned the SME market earlier. Why has it been so difficult, despite all these high-profile events, so difficult to get the SME market to take up cyber at a faster rate?
We've had actually a good amount of success in the SME market space. But to answer your question, I think there's still a lot of runway for us there. And I think there's a few reasons. There are a lot of throw-in cyber coverages still on whether it's a homeowner's policy or whether it's a BOP or things like that. And I think a big part of it is educating the retail insurance marketplace as to what true cyber coverage is. That's really what they need. That's going to address everything from their business interruption to their media risks and things like that. And so I think part of it has been a misunderstanding of, I have cyber coverage already, without maybe the knowledge that, but I think some of these more recent events will serve to bring front of mind, here's what's going on. Did you know this could be covered and it's not covered maybe on your BOP? So we're getting there. I'm pleased with how the SME market has responded, but I think we've got still a great amount of opportunity.
And just to add to that, I do think we've seen the numbers in terms of the numbers of SME risks that are being written. I think we've seen those numbers increasing. the premiums that are being generated by that are small. So when you look at the overall cyber
Right,
market premium,
right.
it's still majority of that premium is still coming from some of the standalone coverages from maybe the mid-size to larger risk. But I do think we've seen some movement upwards in terms of more risk and more policies being sold to
You're
SME
100% right.
and enterprises. So I do think there's some progress being made in that regard.
Steve brought up BOPs. Do you foresee a day, Dwayne, when cyber is just a part of every BOP policy and perhaps an opt-out as opposed to an opt-in?
Sure, that's a great question. I do see a future where that can happen. I do think that we'd have to be very careful, though, with the sublimits and be very careful to not offer too much coverage in that area because the cyber landscape is continually changing. So we do want to manage that exposure from a limit standpoint. I do think that is something that is happening currently, but in the future, we can definitely do more and provide more clients with that type of coverage on a BOP policy.
Are you optimistic where the market is and where it's headed and will remain profitable?
I am optimistic. I've been doing this for a while, and I've seen a lot of things happen, a lot of changes, and the market has been very resilient and very humble with regard to the new changes and open and respectful to what we've been seeing. So I'm very optimistic. We're heading on a great path. There are a lot of changes and a lot of new things. I learn something new every day, and I enjoy it. So I think that's just my opinion, but I think there's a lot of appreciation for the market.
All right, this has been a great discussion. Dwayne, Steve, David, thank you so much for taking the time to speak with us today.
Thanks for having us. Thank you.
From the WSIA conference in San Diego, I'm John Weber for I Am Best TV.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.